Hey everybody, welcome to Our Stock Trades. In this channel, we love to help retail investors go from gambling and losing money to making strategic investments that will build long-term generational wealth, not just for themselves, but for their family and loved ones. I gotten a lot of requests to analyze the Skillz stock, and just letting you know, fair warning, it's not going to be pretty. So what we're going to be doing here is once we analyze the Skillz stock, we're going to insert our data into our proprietary intrinsic value calculation, where we are going to basically give you a price target on where the stock is headed. So we're going to go ahead and start from the first graph, and I'm going to take you, usually I like to do these videos in two parts, but we're going to try to get it done under 10 minutes. So let's go. So as you can see here, we're graphing the revenue here, which is in kind of a light blue color or a blue color. The green here is the free cash flow, which is obviously trending down. And then the purple here is the net income. What I want you to focus on here is the red. Red is our linear analysis trend line, which basically estimates where the free cash flow in terms of the trend line, where is it headed and where can we forecast it. Now, obviously, we are in a negative trajectory, but what I like to do is I like to go in and compare this trend line with the actual free cash flow. And essentially, when it's above the line, obviously, it's, I would say, somewhat of a decent bullishness. But what we want is we want a trend line that basically goes up. And as you can see here, all these trend lines are going down except the total stockholders' equity. But we're starting to see it actually going down here as well. Now, if you want to derive this, you can easily get this from the income statement and the cash flows from the statement of cash flows, EPS from the income statement, and the stockholders' equity from the balance sheet. Okay, and obviously the stock price, right? You can get that from the exchange. All right, so from this analysis here, I want us to take a look at the first hit, the first red flag. We can start to see that the free cash flow was trending downwards. In fact, it got to a point where we had the ability to cut our losses at around $12, okay? But yet again, this is just basically analyzing, if you may, the technicals of the fundamentals. In fact, you would have been able to understand what the share price is going to be by using our proprietary intrinsic value calculation. But now, hold on. That second hit, let's say if you did not have this proprietary software, you can look at the second hit hypothesis right now, and what you can basically see is that the free cash flow line dropped below the trend line. And not just that, the net income was basically falling below that line as well. And then all of a sudden, that stock price was at $8. So you could have left around that price. But unfortunately, look what ended up happening after, when was this? Let's zoom in here, January 27 of 2022, like January, February of 2022. So if you were to go to the Skillz stock price from the January location, you could have got out of here at 8. And unfortunately, if you would have held, you know, we already know, right? And I'm sorry. And which is why we're making this video. Okay, so what we're going to be doing now is we're going to look and essentially look at the revenue because, and let me just zoom in here now because now our analysis is going to go to our proprietary software. We're going to look at the revenue. And unfortunately, since the free cash flow is negative, you can't do a DCF and actually analyze the stock's value because it's negative. But what you can do is set bare assumptions saying, you know what? If this stock does become profitable, if their business model is successful, what would be the estimated free cash flow? So what you can do is you can take 5% of the revenue and get the estimated free cash flow. Then you could take the average estimated free cash flow and plug it into our proprietary software. But let me just tell you something really quickly here. You can see that the revenue has honestly gotten down, which is actually not good. Growth companies like this, you want them to actually grow, and we're going to grow to the growth section very shortly. But in the meantime, we're going to go ahead and plop this $9.8 million worth of average free cash flow into our calculation here. So 9.8, okay? And we're going to look at 10 years into the future. So you're going to see an estimation go literally to 2032. Okay. Now to look at the shares outstanding, we can go to our proprietary brain machine software to look at the shares flow and to look at Skillz here. Let me sure I get the ticker right here. SKLZ. And by doing that, you can get an outstanding share of 340 million. And if you don't believe it, you can go ahead and calculate it yourself here on the bottom here, okay? So there's that, and those are directly from the SEC filings. So they're about 340 million, so 340.8. So we can go ahead and put 340.8, okay? Now let's go ahead and estimate the estimated short-term growth rate. Now, unfortunately, we can't take the growth rate from the revenue from 2021 to 2018 because obviously this is skewed. This is a skewed form of revenue because it's, you're literally going from 384 million all the way from 50 million, growth from 50 million, which obviously this growth is not sustainable. They are not going to continue to do this. So what you can do is you can break down the revenue growth, take the difference quarter over quarter, and you can see a delta change of around 35, 2%, 13%, 24%, 7%, 14%, 7%, negative 14%. And you can average this out and you can get 11%. Or you could just basically go ahead and take the Q1 from 2022 and Q1 of 2021, look at the average, and you could see a 12% increase. So a lot of analysts are projecting a 10 to 12% increase. Again, guys, this to me does not look like a good business model. They need to work on getting their product out there, getting it in the hands of a lot. Now the problem is, what do? It's so hard to raise capital now. Debt is increasing. In terms of the interest rates, it's very difficult to get debt here. So this is, they're stuck between a rock and a hard place. Do they focus on growth and burn more cash, or do they become efficient to what they have and just grow at a 10% and become a value company? I don't know how they're going to do that, and then go in and basically try to up that free cash flow for it to basically bounce in the positive or trend, go above our trend line. But the problem is, look at the EPS, the earnings per share diluted, which I like to use personally. You can see that it's going down below our trend line. Even your stockholders' equity, essentially, how much does the people that own the business, how much equity do they have? And you can see that's going down. And unfortunately, obviously, with that as well, the stock price. So unfortunately, it's a very dangerous game here with this company. And if they continue with their trajectory, we're going to be seeing what that stock price is going to look like. So I'm going to give them the benefit of the doubt. I'm going to have them grow. On average, let's do 14%. I would say let's give them 2 more percent, right? I think that's pretty good, right? Let's do 14%. And that's literally giving them more than what they deserve. And by doing that automatically, you can see that the stock price goes anywhere between 27 cents from a recession level to 48 cents from a bear, all the way up to an 88 cents from a bull. Now, you have to ask yourselves, okay, well, what does this mean? I should expect approximately a 10% return at these prices, which means that, guys, listen, you are probably, if you want to buy it right now, I mean, this is just terrible. I mean, it's just, there's so many companies out there that are way better than this garbage. I mean, I don't want to be rude here, but this is just pure garbage. You want this company to make this, like let's say you want to sell at $10 or $9, okay? Let's see what growth rate you would need. You would need, at this rate, approximately a 60% growth rate to have a base case of around $12, okay, and $8. But based off of this, it's going to take a couple of years for even Wall Street to trust this business model, because obviously it's failing. So, I mean, you can go ahead and, I'm not your financial advisor. I'm not a financial advisor, but, the whole hopium, getting down your knees and praying, that's not investing. But as you can see here, you could have easily predicted this, by looking at the quarter over quarter growth. And you could see that it was technically slowing down, and starting to level off near 2020. And you could have honestly, most likely the beginning of 2021, but you could have honestly looked into the analysis here, and you could have played with the assumptions, and you could have said, you know what, I'm going to have them grow, worst case scenario, 30%. And you could see that even if they grew out 30%, you would get a stock price anywhere between $1.37 to $2.76 from a bull, which is essentially what it's trading at on the bear case right now, 129. Just like what we do for Clover Health or any other stocks that are technically free cash flow negative or net income negative, what we can do is give them lower growth than what they actually have to anticipate if the stock does go down, does it give us a margin of safety? What is a margin of safety? It allows us to buy at a stock so low that the ability for it to go lower, the probability of that is low. And if it does, well, your conviction and your analysis backed by the fundamentals, well, it's very clear. Now, let's go ahead. I wasn't going to do this, but I feel bad for these folks that are bag holding this. Let's go ahead and give you guys some technical analysis here, and let's do some stock research. And I don't want to be like, like a jackass or something, but it's just sad. I mean, I don't want to see retail lose like this, but let this be a learning lesson. So let's go ahead here and let's do Skillz here. And you can see from our Monte Carlo simulation projection, which is a machine learning algorithm, it shows you that the stock is headed down in the penny region based off of this projection, which is machine learning. You can look up Monte Carlo from MIT, take a course. It's free, open courseware to learn a little bit more about it. Now, let's go ahead and let's take a look at some support and resistance lines for Skillz. We can go in and take a look at the minute. And again, this is for short-term investors trying to basically make a buck. I wouldn't call this an investment. I would call this speculation. So you can look at the technicals if you want, but I'm just going to give them to you for people that are wanting to know the short term, because people want to know what the stock is going to be trading on Monday. The answer is no one really knows, but we're going to go ahead and give it to you here. It uses artificial intelligent technology that pre-graphs support and resistance lines. So we're going to go ahead and do the hour, do the day, and also the week, okay? So as you can see here, based off of these resistance lines, the testing point is $1.23. You can see there's a lot of support here. And right now, the biggest barrier, honestly, that I see is $1.45. Okay, now let's go ahead and look at the hour. And you can see here, $1.24, it's kind of been bouncing off of this right now. And if they can fix their marketing, technicals, and whatever they want to do basically with their fundamentals, the next level of hard resistance is 177, 218, and also this one here, 305 to 366. So you can see it's a battle to get up there. It is such a battle. And you can see here $1.60, 215, 297. And if they do somehow pass this $4 region, you can see that the next level shot up is around 6. So hopefully they could recover. Honestly, this could be a short squeeze candidate, but we can go ahead and take a look at the short volume really quickly. So let's look at the short volume. We'll look at the United States, and we'll look at SKLZ. And this is all part of our proprietary software. You can find it at stocktwits.com. Let's look at the shorts here, because I'm sure there's a lot of people shorting the stock. So definitely the short volume is pretty high. It recently just fell here. Let's take a look. This is directly from Fintel. We get access here, and we bring it to our members. So we can look at here. We can see around 19% short volume, 21%. It is falling down, but it did go as a high. It did have a pretty intense high here at around 32. But based off of this was around July-ish. So if you look at the stock price here within the past month, so you can see a relatively strong increase. So you can go ahead and turn this into a short squeeze indicator, but it's not part of our top short squeeze stocks. So that is right there. If you like our analysis and want to have access to our proprietary software so you can invest intelligently, we have been featured on Bloomberg, MarketWatch, NASDAQ, Benzinga, and Yahoo Finance because our product works. We have a team of engineers that are bringing you guys the best, and we get data directly from Wall Street itself. And we parcelate that, aggregate the data, and work with other software engineers to provide the best experience possible. If you like this video, please don't forget to subscribe, comment, like, and share. Please tell me what stocks that you want me to analyze, and I will see you on the next one.